Hello traders, this is Rich Derrick from tradesight with the market preview for January 10th, 2013. Now we had another frustratingly narrow range session, so please don't shoot the messenger, but I want to go over the technicals and see what they may imply for the coming sessions. The ES essentially went nowhere today. It was up on the close, up 3.5 handles, and the NQs were up about 8. Kind of a seesaw session, but the reality was the ES futures closed pretty much exactly where they opened today. We had a little up, a little down, but really nothing to speak of. The only thing that we can take away from this is that we're still trapped in the same range, and we really haven't done anything to speak of. And we are building energy into this trading range in this pattern. Across the board, kind of just a lackadaisical day. Most of the equities are up a little bit. Commodities were mostly a little bit weaker. We had a soft report from the government number for the crude inventories, so crude was a little bit lower. It was higher for most of the session. They broke it down after the report. That kind of took commodities with it a little bit. The dollar was kind of mixed today. We saw some strength in the yen versus the dollar. And we're kind of back up, retesting that prior high. And we'll definitely look at that chart again tonight. Take a look at what may be in store for the yen and what the implications going forward might be. So next, let's take a look at the broad market futures. We're going to look at the ES futures and then the Nasdaq, and then we'll get on to some intermarkets and internals as well. So here's a look at the ES futures, and you really need a microscope or at least some kind of magnifying glass to really take anything away from this. We're still boxed up inside of this breakaway candle after the congressional announcement. So we've really done nothing here other than hold this gap open so far, which the bulls could point to as a point of strength. And of course the bears will point to, well, you had this big breakaway gap and you haven't been able to make anything on top of that and make good on it. So right now we're still in this little consolidation range. There's really nothing new technically, other than we're just winding up in this pattern, which is extending itself here with more and more power. So when we do leave and resolve this range, I do expect that we could have a pretty good move, since we've spent so many days in here. And once we leave this comfort zone, traders will be putting money to work one way or the other. Now here are the NQ futures, which are relatively much weaker than the S&P futures. We're much further away from the prior high. Essentially the same pattern, a little bit sloppier. We've had this low taken out more decisively. We've gotten a little bit into the gap, but again, we haven't really done anything either way. So essentially, this is still just a range trade, and waiting for this to be resolved. The NQs are still above all three major moving averages, which is important: the 10, the 50, and the 200. But until we get pushed off this little ledge here that we're on, as far as this little consolidation range, there's really nothing to speak of. I do expect that as we get into the heart of earnings season, we're going to get gappier, and when we do that, I think the market will have something to work off of. Internally, the market was fairly unimpressive, let's say, or undramatic, perhaps might be more appropriate. The put-call ratio has retreated kind of back to this midpoint between the two climactic areas, the overbought and the oversold reading up here. So we're really just dead neutral here with the put-call reading. Here's a look at the 10-day trend, the ARMS index. This is the 10-day average of that index. We recorded this very overbought condition here just a few weeks ago. We did make a new high in the move here, but we're still quite a ways off from that 1.35 oversold condition. So essentially, this is still neutral too, and really not giving us anything to sink our teeth into. The multi-sector chart continues to show strength in the BTK. The financials, which are represented here in the green line, were relatively weak today. I mean the gold and the precious metals and the defensive play, they really continue to be a source of funds for the more growth-oriented names. So really no change in this. We did make a new high in the move here in the biotechs. So as we talked about last night, continue to look to the BTK for breakout plays. even though admittedly we're pretty long in the tooth here and pretty deep into this move, but we still have relative strength here. You have to really kind of make your hay while you can. So continue to look here for longs until we get a reversal. Now, as far as the pure intermarkets go, let's take a look at the BKX versus the broad market. The BKX here in this chart is represented by the blue, and has had pretty good leadership off of this last bottom here, really powering higher and really kind of really catching on. Really at the very tail of Q4 2012, we've seen good relative performance so far this year. However, today we did definitely see relative weakness in the banks versus the broad market, and this is definitely going to be unwelcome. It could be a change up for the overall market. So be prepared here for the banking index, the BKX, really starting to find some better resistance that it really hasn't had yet, and potentially being a source of funds rotating into some later cycle plays. That's something we're going to talk about in the coming weeks if this does in fact develop, and we'll look at some more intermarket charts, looking at more of these the later cycle plays. If in fact this does develop into something, definitely going to be looking at a cross here in the chart. If we get a cross of the BKX below the SPX, that's definitely where we're going to start looking towards the more late cycle plays. Now, as far as the individual sectors go today, here's the hardware index, the HWI. This is definitely the better performer on the day in the top overall sector. We do have a seeker exhaustion in play. The risk line, the stop loss level here, the magenta line, has not yet come into play. We haven't even challenged the prior high. This has had a pretty good run. It's not really bumping up against any major Murray math levels. Right now we're just kind of hanging between the 6/8 and the 5/8 level. But the one cause for concern here to the bulls is that while we did have this complete seeker run, the 9-bar setup phase and then the 1 through 13 countdown phase, we never even got above the 200 DMA. That's the green moving average here. So while it is a nice little bounce off the bottom, and has not yet challenged the prior high, it's not challenged the 200 DMA. So if we make good on this 13 exhaustion signal and settle below the 10 EMA, that's the aqua line here, definitely going to be looking at the hardware names, HPQ, Apple, and whatnot for short setups. Here's a look at the SOX. SOX was up fairly strongly today, up better than 1%. Definitely performed better than the broad market and even the NASDAQ within that. So it's kind of doing this little lateral declining pullback here. Hasn't really been up to challenge the prior high. This 8/8 level is going to be very, very formidable if it gets there. And in fact, I'd almost love to see them run it up here. Because if they run it up here, we're going to be up 11, 12, 13 bars in the secret count. We're up to 10 right now. And if we get to 13 bars on the secret count into 8/8 level, that's going to be a wonderful shorting opportunity on a rollover. So that remains to be seen. But right now, we had a little bit of strength in the overall SOX. But at the end of the day, technically, it was still inside of the previous day's range. So until this little range gets resolved, there's really nothing new technically. Here's the BTK index, which was definitely the star of 2012. We made a new high in the move today. We settled above the 8/8 line. We've got quite a bit of distance to go before we get to plus 2/8 and contemplate a frame shift for a bullish power move to the upside. And I kind of think that's not going to happen. And the reason is that we have a seeker countdown now that we're up to 12 bars as of yesterday. Where this is going to print a red 12 as soon as this candle opens tomorrow. That means we're one day away from an exhaustion warning. We're into overbought territory on the Murray math scale here. So we expect that while this is a new high, this breakout is probably not going to go too far before it runs into trouble and reverses back to the downside. Here's a look at the BKX. The BKX was today's worst performer. We actually wound up settling below yesterday's close. We're starting to inch back down below this 8/8 level, which is never a good sign. This is a pretty extended run here. If you look back a little bit further, this has had a very, very good run to the upside here. So this definitely could be something that's potentially running out of gas and potentially starting to turn here. So I definitely keep an eye on this. We have a little bit more room here to the upside before we get a weekly 9 bars up. Working on 6 bars up potentially here, so we'll have to keep an eye on this. Here's a look at the oil futures, which were fairly flat on the day. They were trying to push it higher before the report came out. This still looks relatively bullish. It's not too overbought yet. We're up into some intermediate resistance here at the 4/8 level, which we have not yet been able to clear. And you can see over on the left-hand side of the chart here, that is prior resistance. So this is definitely an important area. If we pivot above this, I expect that we will run up and complete this, or get close to completing this seeker exhaustion run, of which we're only 4 bars up right now. Here's a look at the gold futures. The gold futures are still kind of hovering around the lower band of the Murray Math box right now. We used the 0/8 level for support, and right now we're just kind of just hanging around in here with this gap still open that was left from a week ago. So nothing new technically here in the gold futures. We're still below all 3 major moving averages, and really need to get some kind of a positive pivot here. Here's a look at the copper futures represented by the JJC ETF. The overall chart is potentially setting up for a seeker sell signal, where we got our 9 bars setting up right here. Then we counted up to about 12 before we initiate this little bit of a pullback. So the next time we get a strong close and meet the criteria, we're going to get our 13 exhaustion in the copper futures. Now, and keep in mind here, the copper is often referred to as the PhD of commodities. It tends to lead commodities, and it's the one that really has the fewest amount of speculators in it, and is really kind of the more pure play. So if this does record a 13 exhaustion, starts to roll over, definitely pay attention to that, and definitely be willing to sell new lows in the other commodities that are already weak, like gold and silver. So that's gonna be it for today. If you have any questions, you can always pop into the Trading Lab and ask the analysts questions in real time via the free trial offer that we always have extended to folks. And please feel free to leave a comment. And until next time, this has been Rich Derrick from tradesight. Good trading.